Buddy, my name is Christine.
Good morning.
I'm a realtor full-time for 6 years with Happy Real Estate, and I truly, absolutely love it. So I came up with this idea to every quarterly to actually have a first-time home buyer event. So to explain the whole process with my team, because I feel that buyers should be educated on what they're getting themselves into. Yes, I'm going to lead you every step when you're buying a house, but it's even more better when you know what we're talking about while you're buying the house. So that's basically what's going to happen today. We're going to explain the whole process as if you were purchasing it today. And then if you have any questions, you can put it in the chat, text me later. Some of the people already on here are either purchasing or thinking about purchasing. So thank you for taking the first step of being educated. And so obviously we first start off with mortgage. So before we do, I just want to let you know who everyone is. Karif does all the mortgaging. And if you need your taxes done, that's my guy, you know.
Absolutely.
We have Terrence from Your Home Inspector. He's the bomb.
Howdy.
Hector from Homeowners Insurance.
Good morning, everybody.
And Jasmine from First American Title.
Morning, everybody.
Oh, I see Deidre. Don't know who that is, but let me answer. Okay, so reason why, because I have a lot of customers that say, oh, you know, let me go ahead and send you some houses and we can look at it. And then we go look at it. We just wasted time and gas, and then we don't have anything because you're not pre-qualified. So instead of getting you all excited, I'd rather get you pre-qualified first so we know what we're dealing with and how much we're dealing with. So that's what we need to get pre-qualified with Karif. So Karif, if you can go ahead and introduce yourself and have fun at it.
All right. So what's going on, everybody? My name is Karif Gardner. I am a senior tax professional with KBG Tax Service. I've been doing taxes for over 7 years, as well as I'm a loan officer with Gold Star Mortgage, which is a direct lender down here in the South Florida area. So as a direct lender, we have advantage of all of the loan products that are available: FHA, conventional, VA loans. I have, not through Gold Star, but through another brokerage, I have access to hard money lending for real estate investors, as well as we also do refinancing. We do gift of equity purchases. So anything that you need to get done when it comes to real estate and financing, at Gold Star, we are able to actually get that done for you. So what I'm going to do, I'm going to share my screen. And I'm just going to try and give you guys as much value as I can in regards to the home buying process from start to the finish. Because at the end of the day, a lot of times when people think they're about buying a house, the first thing they do is they go to a realtor, but then a realtor ends up sending you back to a person like me to get pre-qualified. So getting pre-qualified is the first step, because if you have no idea how much you qualify for, the realtor has no idea what to show you. They have no idea what kind of search you can look for, because they need to know your financials. All right. So let me go ahead and share my screen. I'm going to start this off. Boom, boom, boom. And how do I put it in presentation mode? Presentation mode. Okay. All right. So can everybody see the screen there? Oh, can you guys hear me? Everybody can see the screen? We're good? All right, no problem. So like I was saying, my name is Karif Gardner. So I'm with KBG Tax Service, senior tax professional with KBG Tax Service, as well as also Gold Star Mortgage. We do all, when it comes to taxes, we do all taxes. We do for real estate investors, we do it for entrepreneurs, we do it for individual 1040 tax returns, partnerships. The very good advantage of having somebody that has a tax background that does mortgage is that when dealing with our self-employed borrowers, we really know how to dissect the tax return in order to really try to maximize the loan amount that you're going to be approved for. Because that when you're self-employed, the only document that matters is what you file on your tax return. Is whether you're reporting profit or whether you're reporting losses. So making sure that you're maximizing the tax code so that you can report as much income and pay the lower tax bill. That's the advantage of having somebody in your corner that does mortgage and that does taxes as well. All right. So when it comes to the home buying process, the first step is getting pre-qualified. After getting pre-qualified, you then go to your realtor, which is step 2. After you now that the realtor now has a pre-qualification letter, they know what price range to shop for. They're going to now give you a list of properties that's within your range. You then send that list back to me. I look at it to make sure that it fits your budget. All right. After that, you then find the house of your dreams, the one that you want to put under contract. After it goes on the contract, we then, as a loan officer, I then send you a loan estimate. A loan estimate. We're going to start order your appraisal. We are going to order your inspection. And then after you get your inspection, we then get the inspection report, which is then given to the insurance agent to shop for your insurance. And then after we put all those things down together, now you're also going to work with your title agent, which is going to be Jasmine. All right. Your insurance agent, which is going to be Hector. Your inspector, which is going to be Terrence. All right. So having a good team is very important, because in order to fit your budget, we all need to be in good communication and need to make sure, okay, my buyer needs insurance policy that's going to be in this range in order to fit their budget. But this is where people, one thing you don't want to skimp on, the most important part when after getting on the contract is really having a good inspection. You want to have a good inspector on your team, because the inspector, you're paying the inspector outside of closing, you're paying the inspector works for you. His job is to make sure that the house that you're buying is not a dud. And, his job is to make sure that, okay, the roof is okay, the electrical is okay, your AC is okay, your plumbing is okay. And then that report is then given to the insurance agent, and based on how good that report is, that determines how the insurance agent can now find discounts for you to get you the best policy. Okay, so documents. All right, so when you're ready to get pre-qualified, what we're going to need is last 30 days pay stubs. We're going to need last 2 years tax returns, last 2 years bank statements, because we need to show assets. We need to know that you have enough for the down payment and you have enough for closing. All right, your driver's license. And then of course, this is only if you're buying a house and you own other property, then we may need other documentation from there. But the main documents are going to be 30 days pay stubs, last 2 months bank statements, last 2 years W-2s, and your driver's license. Okay. Now, the 3 factors that we look at in terms of qualifying for a mortgage, the first thing we're going to look at is your credit. Where's your credit at? Okay. Then we're going to look at your assets. We need those 2 months bank statements, because I need to know that how much do you have towards a down payment of a house. All right. The other factor is going to be your income. So credit, down payment, and income. If you have 2 out of 3, we can work on that pre-qualification, because we can work on that third item. If you have an issue with, if you have your down payment, your income is sufficient, but then your credit needs some work, we can work on that. If you have the income and you have the credit, if you have the income, you have the credit, and you need help, assistance with down payment, that is something we can work on. That's something we can work on getting a gift. We can work on down payment assistance program. Now, if you have the credits and you have the down payment, but then the income is an issue for what you need for your home, then we need to talk about adding a cosigner. So that's why I say, if you have 2 out of 3 factors, we can work on the third. As long as we're in that communication, we can work on that third to see how we can get you to achieve your goals. All right. Now, credit. All right. Of course, there are a lot of different updates since COVID. The minimum requirements for, in regards to the minimum requirements for credit qualifications was increased, because before you can get a loan as low as 580. Most of the other banks have raised their minimum requirements to almost a 680, 700. At Gold Star, if for FHA and conventional, you want to at least have a 640 credit score. For VA, you want to at least have a 600 credit score. Understand that the higher your credit is, the more favorable terms that you'll end up qualifying for. Now, if your credit is so-so, all right, the things that we're going to look for in your credit are going to be items that's in collections. You don't want to have items in collections. Main reasons is, even though you feel like you're not paying for them and you don't feel like you're responsible for them, when I pull it up in your credit report, I'm going to hit you with the payment. So you can't hide collections from us when we pull the credit report. All right. So collections and bankruptcies, that's something we're going to look for. And then, of course, loans that are in forbearance. A lot of times, if you have a mortgage and you're trying to buy a second home or investment property and you have your loan in forbearance, you have to take it out of forbearance if you're trying to qualify for a mortgage. Student loans, I know that recently they've made some updates to the laws in regards to how they're treating forbearance on student loans, but definitely that's something that you want to look at, because if your loans are in current forbearance, even though you're making a 0 payment, I still have to hit you with the payment. I have to hit you with at least 1% of whatever the balance is. Or if you're on an income-driven repayment plan, you would need to then furnish the document that let me know what, after forbearance, how much is your student loans going to be. How much is your student loans going to be after the forbearance period? Because we can't just leave it at 0. All right. Understanding your credit. I'm trying to just go over this very briefly. This is especially a lot of people, they look at their credit on Credit Karma and so on and so forth. So the biggest thing is going to be your payment history. So if you want to know the reason why your credit probably fluctuates up and down so much, it's going to go by your payment history. So a lot of times, when it comes to your payment history, I've come to find out that people are starting their credit a lot later than when they're supposed to. So when you're 28 years old or 30 years old, and then you just got a credit card 2 years ago, you don't necessarily have the payment history. You don't have the payment history to take a late payment. So if you only have a 2-year payment history, and then you only have 1 or 2 credit cards, you miss one payment, you're going to realize that your score is going to jump up and down 50, 60 points because the history doesn't support it. All right. I'm going to go over a little bit in that going ahead, but in terms of payment history, then the amount owed. So what are your credit limits? How much credit available do you have versus how much debt you actually have on the credit card? So your credit utilization is very important. Your accumulation of new debt. The type of credit, it also matters. That determines how strong your credit score is, because sometimes you can still have a 700 credit score and still not get qualified for a loan because you don't have any depth in your credit. You don't have enough credit history. You don't have enough of a good credit mix. So type of credit is going to be involved, because these are things that we look at is installment loans, which is going to be like your car note, car note, any type of fixed payment that you have. Your revolving credit, your credit cards, your auto loans, and then also having a mortgage. So type of credit also matters, and then length of credit. How long has it been since you established your credit history? Okay, so here is a quick chart to determine where you need to be at in regards to where your current finances are. So like I was saying before, your credit utilization is very important. So to be in a good standing, you want to make sure that you're under 29%. Under 29% it would be extremely favorable in terms of your credit score. Then you go down to payment history. This is very important, like I was saying before, your payment history, because if you miss one, let's say you have one credit card, you now make 12 payments within a year. If you miss one payment and you do 11 divided by 12, you're going to understand that that is definitely not 99%. Okay, that is definitely not 99%, and you automatically go to a F rating, like what you will see on Credit Karma, an F rating. All right, if you now have 10 credit cards, and then you make, that means you have 10 credit cards, you're making 120 payments within a year. If you miss one payment, you'll still be in that 99 percentile. Okay, so understanding and having multiple lines of credit is also that's what people need to do. I think previously how we were taught that having credit cards were bad. And then because we were taught having credit cards were bad, a lot of us didn't apply for credit cards when we had access to them. So therefore, you realize only having 1 or 2 credit cards is not, when you look at Credit Karma, you'll look at Credit Karma and say, oh, they want you to be in a good rating. They want you to have anywhere between, they want you to have at least anywhere from like 11 to 12 accounts. Or at least more than 10 different lines of credit. So you'll understand, look at where it says very poor. When it says total accounts, how many accounts do you have? That means how many lines of credit you have available. If you only have from 0 to 5 credit cards, you'll understand you're going to be in a very poor rating. All right, because that determines that credit mix that I was talking about, and also how many credit cards you have determines how many payments you're going to make per month, and then over a year period, that determines how many payments you make within a year. And then if you happen to miss a payment or two, you have at least that cushion to fall back, where if you miss a payment or two, it's not going to swing your credit like this. Okay, so understanding your credit is very important. If you need additional help to understand your credit or where your finances are, my information will be here. You guys can reach out to me at any point in time. All right, so housing payment calculation. This is very huge, only because people get the wrong idea when they look at Zillow, they look at Realtor.com, they're looking at things online, and then they're seeing the housing payment calculated online. But then, because they don't understand how truly housing payment is calculated, when you look at Zillow, they're factoring in as if you're putting in 20% down, not paying any mortgage insurance, and then not factoring in your taxes and insurance. So what your housing payment consists of, it's principal and interest. So a lot of times when you look at Zillow or you're doing your research online, they're only showing you principal and interest. Okay, they're only showing you principal and interest, and then you have to calculate the other factors based upon what house you're moving in. So your housing payment is going to consist of principal and interest. It's going to consist of real estate taxes. It's going to consist of homeowners insurance, HOA, especially if you're looking at condos or townhouses, and mortgage insurance. Anytime you put down less than 20%, you're going to have mortgage insurance. All right. Anytime you put down less than 20%, not only are you going to have mortgage insurance, but you have to factor in your taxes and your homeowners insurance, because you have to do what's called escrow. All right. If nobody's understood or heard the terminology escrow, so escrow is basically, as you make your monthly payment every single month, a portion of your mortgage payment that you're paying monthly is going to go into an escrow account. And then when your bills are due, because taxes and insurance are due once a year, your escrow agent then goes in and pays the bill out of your escrow account. Okay. Anytime you put down less than 20%, you have to escrow. When you put down more than 20%, you have the option to pay your taxes and insurance yearly. All right. So understanding the monthly payment and how that works is going to be huge. All right. Debt to income ratio. The reason why knowing your monthly payment matters, a lot of times people, when they're thinking about buying a home, the first thing they think about is the loan amount. It's not the loan amount that matters. It's the housing payment. The housing payment determines the loan amount, and the housing payment is going to, versus what your debt to income ratio is going to, it will determine your debt to income ratio, because your debt to income ratio based upon that is going to determine what loan amount we're going to be able to give you. So Miami-Dade, Broward County has the highest percentage towards personal income going towards their housing allowance. So when most banks will need you to have a 28%, 33% housing allowance, you know, that means if you make 3,000, let's say 30%, right? 33%. If you make $3,000 a month, that means the maximum housing payment you can have is $1,000 a month. All right. And then, of course, you have your total debt to income ratio, which is going to mean your housing payment plus all your other bills can't be more than this. Okay. So your housing payment plus your car note and your revolving lines of credit and installment debt. We're not looking at your FPL bill, your cell phone bill, and all that other stuff. We're looking at your lines of credit. We're looking at your revolving lines of credit, your installment debt. All right. So as a direct lender, we're a little bit more lenient on the ratio. So we allow you to take in a much higher ratio, which allows us to give you a higher housing payment. And the higher housing payment we're able to give you is the higher the loan amount we're also able to give you as well. Okay. But the whole thing is that we'll never want to put you into a house that you can't afford. So that's why your debt to income ratio is very important. All right. So an example of debt to income ratio, let's say you make $5,000 a month. All right, your maximum housing payment based upon a 28 to 33% ratio is going to be $1,400 a month. The maximum debt to income ratio is going to be 2150. So that means your housing payment plus your housing payment plus your car note and all your other revolving lines of debt can exceed more than 2150 with most banks. At Gold Star, like I said, we're a little bit more lenient on the ratios, so we'll allow you to encumber a little bit more more debt, and we'll still give you a higher housing payment. So same $5,000, the housing payment that will allow you to have is $2,350 on an FHA loan. FHA will allow that. Conventional, they want lower ratios on conventional, but FHA will allow you to take in $2,350, and then the maximum housing payment the maximum debt to income ratio, including the housing payment, is going to be 2850. So that makes a huge difference in regards to your options, because understand your debt to income rate, knowing that percentage can determine whether you qualify for 230,000 or whether you qualify for 280,000. And then of course that opens the the ranges of houses that you're looking for. That just gives you more options. That's really the main thing. All right, so down payment. So this is also a very important factor. And I'm a person that I don't like to sugarcoat how much you need to bring to the table, because if you're not close to it, then you know that you need to wait, you need to save, and you need to, and then get it together in order to come to the table to purchase. Because when you're trying to purchase a home, the realistic cost to open a deal and close a deal is going to be anywhere from 7 to 10% of purchase price, and that is putting the minimum down payment. Because sometimes people forget that it's down payment plus closing costs, 3.5% down plus anywhere from 3.5 to 5% in closing costs, depending on the type of house that you're purchasing. Okay, so your down payment can be anywhere from 3% all the way to 20%. Your closing cost is going to consist of title fees, settlement fees, processing fees, government taxes, and then of course your prepaids, which is going to be your property taxes. And anytime you're putting down less than 20%, you're going to have prepaids. So you're going to have your property taxes, your insurance, and then of course for FHA, you have what's called an upfront mortgage insurance premium. All right. So example, $300,000 home, the cash to close, 3.5% down. You're looking at about anywhere close to $22,000, 22 and a half. Okay, roughly. Okay, so now this is the thing though. Down payment is one thing. Closing costs is something that can be negotiated between your realtor and the seller. So that's why it's very important to have a really good realtor on your team. Because sometimes, depending on what house you're looking for, you may be able to negotiate a closing cost credit. Or let's say having a good inspector is also very important, because they go into the house and now all of a sudden they find all these you're under contract and they find all these little issues with the house. Now, okay, it's either they're going to fix those things for you, or they're going to offer you that as a closing cost credit, which is going to reduce your closing costs, reduce your cash to close. So just understand that. But guaranteed, you have to have your down payment in order to even get pre-qualified. You at least need to have your 3 to 3.5% to be to be able to get pre-qualified. Because even if you do a down payment assistance program and they're covering majority of the down payment plus closing costs, they're going to require that you have your own 3.5%, your own 3%. So no matter what, there's no way getting around that. All right, so an example, $215,000 house. I pulled this up on Zillow a while back. So let's say you're looking at a townhouse. This is a 215 townhouse, three bedroom, 3 bathroom. This was available months ago. Look how Zillow will have their estimated monthly payment as $1,100 a month. Okay, $1,100 a month is what Zillow has their estimated monthly payment. This is where people sometimes get confused, because when they come to me and then I give them what the realistic monthly payment is, because they're factoring as if you're putting 20% down and not factoring those other things into the mortgage. All right, so here is a realistic example. This is of a house that we closed. So FHA mortgage right now, like I was saying, interest rates are at the lowest that they've ever been. So you can get a 2.75 interest rate. This is on a 216 house. So you have principal and interest. This is a good look at what the monthly payment will look like for a $215,000 house. So you have principal and interest. You have your insurance. You have your homeowner's insurance. You're going to have real estate taxes. So when you're searching at a home, their tax bill is going to be whatever this number is times 12. Okay, so we'll look at Broward Property Appraiser. You'll see what the tax bill of that house is. You're just going to divide that by 12, and that's what's going to be factored into your monthly payment. Then you're going to have mortgage insurance, and then you're going to have an HOA. Not all places have an HOA. If you find a single family home that's not a part of an HOA, then you can eliminate that. But if you're, most of the times when you're especially being in Florida, when you're under that 230 range, most of the homes that you're going to find in that 230 range are normally townhomes and normally condos. So they normally do have an HOA. So that is also something that you also need to factor in as well. And then I also want to stress to people as well, buying a single family home and buying a single family home and townhouse and buying a condo is different types of financing. Everything that I've shown so far is all about buying a townhouse and buying a single family home. When you're going into a condo, in Florida, condos want you to have at least 25% down to have a condo. We at Gold Star, we can do as low as 5%, but we have to approve the association. So we have to go through the association and we need to get their financials in order to get you into a lower down payment on a condo. Okay, this is only for condo financing in regards to what I'm speaking about. But in terms of single family townhomes, they're FHA financeable. You can go FHA, you can go conventional, you can do 3% down, you can 3.5% down. So that's available to you. So now in regards to funds needed to close the deal. So the purchase price of this unit was $220,000. You have closing costs, you have prepaids. A lot of times you have what's called a discount point. So discount points means that you're paying a percentage of the loan in order to lower your interest rate, to lower your monthly payment. Okay, sometimes you can pay anywhere from because you have something that's called par rate. Based upon your credit, you'll be offered something at par rate where it doesn't cost you anything, and then you have the option say, hey, I won't, your par rate could be 3.25%, but I want less than 3%, or I want 2.5%. Then you have the option to say, okay, I will pay half a point, or we'll tell you, all right, well, 2.75 is going to cost you a point, or it's going to cost you 3/4 of a point, which is 1%. A point is 1% of the loan amount. Okay, so just so you understand that. So discount points, when you're doing FHA, you have what's that upfront mortgage insurance premium, which is financed into the loan. You're not paying that outside of closing. That is financed into the loan. So this deal for this person, after she went on contract, she put $3,000 in her contract. Her remaining cash to close was $17,000. So this deal is on a $220,000 house. It costs about $20,000 to close it. And this is realistic numbers. This is to give you that realistic perspective of what it takes to really kind of really close a house. Okay. Now, factors that we can, like I was saying before, the factors that we consider in the mortgage, like I said, your credit, which is the first thing that we went over. We went over your down payment. We went over what your household income needs to look like in terms of debt to income ratio. And as long as you're working with 2 out of 3, we can try and work on the 3rd in order to get that pre-qualification, or at least put you on a game plan in 90 days, 60 days, or 6 months. So at least and try to put you on a game plan on how to achieve your goals within that time period. So like I was saying, we offer all the different type of loans, FHA loans, we do the VA loans. VA, if you are a veteran, that's probably one of the best loans that you can get access to, because it's zero. It's a 100% financing, 100% financing, and then also the only thing you have to do is pay for closing costs. And then if you have a good realtor like Christine that can try and negotiate, then you can come out to the table paying almost minimum down to actually getting your house. And VAs don't pay mortgage insurance, so even though it's 100% financing, they're not paying mortgage insurance, so they really get the best monthly payment ever. So if you have access to a VA loan, definitely you want to use it. And also, VA and FHA loans can also be used to purchase multifamily. So if you ever wanted to eventually get into real estate investing at some point in time, that's a huge advantage, because you can get 2 homes, at a 3.5% down, or 0% down if you're using FHA or VA, and then you have access to but you have to live in one of the units. The only way that works is that you have to live in one of the units as a primary residence, and that's what allows you to go minimum down payment on those homes, and then you have access to a rental property. Then when you leave that property, now you have access to 2 homes that we can now use both. We can use 75% of both units to then qualify you for your new house. So that's just real estate tip there. And like I said, working with a good realtor that can help you find those good deals, that's very important. So having a good team matters. Down payment assistance programs are available. Okay, but remember, like I was saying, you need to at least have your 3% down to qualify. And then, of course, with down payment assistance program, how it works as a secondary mortgage. So if you're buying a house that's $250,000 and then you get pre-qualified for a $40,000 down payment assistance program, it's going to work as a secondary mortgage that is then forgivable after 15 years. So if you are getting a down payment assistance grant from the city or from the county, it has to be your primary residence. You can't rent out the unit, and you have to live in there for 15 years. If you don't live in there for 15 years, or you rent it out, or anyhow your homestead exemption changes and it's not like your primary residence, that $40,000 that they gave you, they're going to want it back. They're just going to tack it onto your mortgage, and now you're going to have a new mortgage payment. So just think about that when you're thinking about down payment assistance programs. They are available. They're great programs, but down payment assistance programs are meant to buy homes that you're going to be living in long term. Okay, here is if you can screenshot this, or if you need me to send you, this is a home counseling, because you need to take, in order to get the down payment assistance program, you have to take a HUD approved home counseling course, and then you also you get pre-qualified by a lender. You then go and you take that, you can then go and take a HUD approved home counseling course, and then we can go and put an application in with the city or the county in order to start seeking down payment assistance funds if that's your objective. All right, and then tax advantages. Remember, it is tax season, people. Owning a home is a huge tax write-off for you. You're able to write off the property taxes, the interest, the insurance, especially if you own a business. You know, a huge advantage is that if you own a business, and then your principal address for your business is your home, then that allows you to write off pretty much a lot of those things. A lot of those things in your home: the mortgage payment, the mortgage payment, the interest, the property taxes, the utility bills, repairs, those type of things you'll be able to write off, because now that's now a business expense, and it is also the principal address. It's also the principal address of your business. So it's a huge advantage when you own a home and you're also a business owner. If you do not own a business but you work from home, you can also write off a percentage. You can also, if you can dedicate a room inside your home as an office, and then you'll be able to write off a percentage of your utilities and your monthly expenses, including your rent, as a tax write-off. So that's definitely a huge advantage there. For us, that is pretty much my segment there. I do hope that you guys got tremendous value from it. If you felt that I talked too fast, I do this every day. This is my lingo. You know, if you felt like I was saying things that you guys didn't understand, please drop comments. You know, drop comments, ask questions, because I'm open to doing a Q&A, and I'm more than willing to give out my contact information for you guys to reach out to me if you guys have any questions, because I want you guys to understand this. You know, knowledge like this is not given out for free every single day. You know, so having access to someone that can give you that information you need to get you from one level in life to the next, you know, that is very important, and I'm leaving that line open and available to everybody here. All right, so thank you guys for having me. Have any questions, let me know. Name is Karif. Talk to me.
And that's the end of our presentation today. I think he did a great job. I'm just playing. I mean, he answered a lot of stuff. I was like, wow, okay, great. If you can stop sharing your screen so I can get Terrence.
No problem. No problem.
I did put his information in the group chat so that you can ask him any questions that you need, as well as Instagram is on there too, and his email. So now that you've been pre-qualified, we got your loan. Now it's the fun time. Hey, I get to go ahead and create a search for you, show you what's available. Sometimes there's not that much choices depending on the price, but homes pop up literally every day. And then you have people that say, oh, I have a lot of time. Yeah, so if you love a house, put an offer in, because they literally go that fast every day as well. It can go within 2 days. It's not a joke. Depending on the house that we end up picking and that we fall in love for, of course, we're going to check the comparables to see if it's worth the purchase price. Majority of the time it is. I'm not going to lie to you. So if you want to negotiate and counter offer, you're more than welcome to, but you also have to remember we live in Florida, which is a retirement state and a party state. International investors come and they offer cash like this. So they're not going to call you back to say, hey, we got a full price offer with cash. Do you want to counter? Sometimes they will, but if they got 12 offers, they're not going to call you and try to negotiate with you. So my best recommendation is If you really love the house, offer full price or something that you're comfortable with, and then we'll get them on the back end, which would be with the inspection and the appraisal. So now that we fell in love with the house, we put an offer in, they accept it. Wow, yeah, I'm excited for you too. And mind you, before I even get into that, because sometimes as a realtor, you guys feel like, oh my God, we done looked at 30 houses and I know she's tired of me. No, I'm not tired of you. It doesn't bother me at all. This is my job. At the end of the day, this is where you lay your head in after you move in. My job is done. Unless you want to rent it or sell it later, yes. But while you're living in there, my job is done. So I want to make sure that you fall in love with the house that you pick and be comfortable with it. That's my goal. So after we get the house and you fall in love with it, then we submitted the offer. We submit everything to the title company, and we need to schedule the inspection right away, which that leads into Terrence. Terrence, you want to speak first before I show you the video? Oh my gosh. You're on mute. There we go.
Now can you hear me?
Yes, we can hear you.
Okay. So my name is Terrence Smalley. I am the owner of Your Home Inspector Guys, and also now just launched Your Home Inspector Gals. I have 2 inspectors now in Orlando as well. But we are the ones that come when Christine calls so that we can make sure that your house is completely safe and ready for you to take ownership. So we're not code inspectors. We're not the fire marshal. We don't work for the insurance company. We are independent of everybody. So we come in and, like Karif said, we're working directly for you to make sure that you're aware of what you're buying. So it's kind of like when you go buy a car, you have a salesman who's going to try to gloss it up and cover things. We go under the gloss and kind of let you see what's really happening. And we're not there to tear the house apart. We don't want to blow the deal for Christine because then she won't call anymore. But we just want to make sure that you're getting what you're paying for. So typically with Your Home Inspector Guys, one thing we do that's different than the competitors is we always bring 2 inspectors to the property. As long as it's not like a 400 square foot condo, you can't have that many people in there at one time. But for a single family home, we have one guy that works the outside, I work the inside, and then we meet in the middle to handle the heavy stuff, which is like looking at the electrical, the major plumbing, your HVAC, making sure that all of your openings are going to be protected from hurricanes and winds so that you can get those special insurance credits. So again, we're not code, we're not there to like look at what was done by the previous owner and say, oh, that's not up to code. That's not what our job is. We just want to make sure that it's safe and it's been attached to the walls properly and you're not going to have things falling on you. So I have a simple little video that probably does a better job explaining it than I do. So I'll let Christine play that, and then I have a little gift for you guys at the end of the video. All right, Christine, take it away.
Gotcha.
Oh, not that one.
Are you a first-time buyer? I understand that buying your first home is exciting. It can also be the source of many questions, even after you decided on the home of your dreams. That's why I provide a first-time home buyer's inspection. It's the same as my standard home inspection, which means that I'll check the home's visible and accessible structure, systems, and components, and deliver a written report with photos. But this inspection also includes a special consultation where I'll go over your responsibilities as a new homeowner. I'll help you understand the condition of the home now, as well as how all of its components and systems work together for their maximum efficiency and service life. I'll also show you the location of safety and emergency shutoff valves and switches, and I'll educate you about important maintenance items that must be addressed seasonally and annually. Let me help take the guesswork out of your role as a new homeowner with my first-time home buyer's inspection.
I just love that video every time you
I
watch
do
it.
too. It saves me from having to talk too much. Well, my throat gets hurt. So not only do we cover all that in your home inspection, there's other additional inspections that you can get at the same time that we're there. And the nice thing about adding on some of the other inspections that you either need or want, like a 4-point and a wind mitt on your first buying a home, you're definitely going to have a 4-point and a wind mitt to get your insurance and mortgage approved. And that'll help get you discounts on your premiums as well. But then we also can do pool inspections, WDO or invasive bugs, which would be like termite checking, checking for termites, pools and spas. So we got like 5 or 6. We can do air quality, mold testing, water purification. We have a full list. If you go to yourhomeinspectorguys.com and under services, it'll tell you exactly, what the video kind of did, but in a bullet list. Here's everything that we're going to cover. And then when we're done, at the end of the inspection, my partner and I will meet with you and we'll go do a verbal Here's like the main things that we think you should be aware of. A lot of things might just be cosmetic or general maintenance type stuff, so we don't really have to go into that, but we do list it in the report and take photos, just so you know that we saw what you're seeing. And then before we leave, everybody gets our new book we just had published, First Time Home Buyers Book in Florida. And it's pretty much a daily guide that you can go through, a checklist and questions and answers, website tutorials that just helps you maintain your house. So as things are happening, you have a better idea of what to do. If you need to bring in a contractor, this is a good reference point so that they're not trying to, pad the bill, so to speak. So again, thanks for letting me be a part of it. And then call and get your inspection for the next 90 days. Anybody that calls in will get a special coupon called Christine Cash. And you'll get $25 off any single family home inspection. Ta-da.
Oh, I love it. Okay, well, thank you, Terrence. So the beautiful thing of an inspection is I've had people actually say, oh, I just want to waive it. I don't care. Oh, yeah, great. No, you can't do that. With the house, you have no idea what you're getting yourself into. So even though that it is not included in a down payment and it's outside of the actual, it's part of your closing costs. At the end of the day, you don't want to waive it because it's an investment, which is your home. And so I'm at every inspection, even if you can't come. And then I told one of my clients, I can FaceTime you or videotape it, but we're definitely getting a report right after the inspection done, which is within 72 hours. But my Terrence guy, he always gets it to me within 24 hours. I know, I'm going to just put you out there. Sorry.
And real quick, on our website too, there's sample reports. If you just want to go take a look and see what, what they look like. I've got 3 or 4 different styles on there for you.
Correct. And so with the inspection, the main things that we want to look into for sure is the roof, the air conditioning, electrical, plumbing. Now, if you see a blind missing, we're not gonna ask for credit because the blind is missing or the paint color is terrible or the cabinets are horrible. Those are just decoration. That's the things that comes in the house. That in the state of Florida, legally, it's an as-is contract, which means you're taking the property as is. They're not obligated to get you a credit. To be honest with you, the seller doesn't have to give you anything, but because he's a good seller and he wants to sell his home, he will give you something towards it. So now if there's something wrong with the roof, it's like $20,000, or there's plumbing, I always get the report and I submit it to you. And then I also let you know that we want a credit for everything, just to, counter negotiate. And so when we get a credit, let's say they give you a $5,000 credit, you're not getting a $5,000 check. So don't think, hey, I closed, I got $5,000 in my bank account. No, definitely not. It goes towards your closing costs, and the deduction comes out of your pocket for the title company. So once we agree to a certain amount of credit, hey, the seller is willing to give you $2,500 towards closing costs, you agree, we sign an addendum and we give it to the title company. The title company is one of the main courses that people in this deal, because they're the people that we talk to for everything, especially doing that deposit. So Jasmine, I'm going to go ahead and let you speak and give you the floor. Muting you would be great first, right?
Here we go. Can you hear me?
Yeah.
Okay. Hi, everybody. My name is Jasmine. I have been doing this for all of 16 years now. It's been the only thing I've ever done. And I will tell you, one of the most important things that I could tell anybody who's buying a home is the team that you're working with will make or break your transaction in any way, shape, and form. I can't tell you how many times I've had people come through the door and they're so excited, and it'll be the day before closing and everything will just fall apart because they did not have a good team. So if you take anything away from this meeting today, make sure you use the people who are here to help you. Karif and Christine are instrumental, and I beg for you to listen. They're instrumental to make this work. If Karif can't get it done, then nobody can. So you want to go with the people who can get it done. Yeah, I see you. Christine's going to make sure you get into the best house that you can find. Hector's going to make sure that you get the insurance that you need. Terrence is going to make sure you're buying a good house. But at the end of the day, Karif is giving you the money. And if Karif can't get you there, then you better go someplace and wait a year, save your down payment, and come back to him. My job is to work with everybody. So at the end of the day, I'm the person that you're going to see at the table. Karif and I are going to be in constant communication. He's going to send me all of the figures that we need in order to get you, to tell you how much money you need. Christine's going to be instrumental in giving me your contract. Title insurance is one of those things that many people don't necessarily know what it's about, but they know you have to have it. So my job is to make sure that the home that you're purchasing is free and clear of any liens. So for instance, that would mean that if I buy my house, I need to make sure that when I buy it, there's not an existing lien, there's not an existing mortgage from the person who owned it before me. Title insurance is unique in that most insurances you pay for annually, and they protect you from anything that could happen in the future. Title insurance, you pay one premium at closing for as long as you own the property, and we protect you from anything that could have happened from the day you purchase going backwards. So if anybody at any point in time, if anything ever came up on title, your title insurance policy will save you. That's what our job is. We'll go for you, we'll fight for you, we'll make sure that everything's free and clear. The most important thing, the reason why you'll end up talking to us the most is when you make your deposit, you're going to make your deposit with a title company. We're going to hold your money in our escrow account. So when you come to closing and you bring me $20,000 and you've already given me $5,000, that means you're only bringing me $15,000 more. Now, you may or may not be able to use First American for your closings, but if there's one thing that I can tell you outside of using Karif and all these fine people on here is that do not ever wire money to a title company without speaking to the title company first and verifying your wire instructions. I can't tell you how many times I've heard of horror stories of someone's email being hacked and, oh, but I got an email from my mortgage broker saying that I'm supposed to send my money here, or I got an email from my lender telling, or my real estate agent telling me I'm supposed to send my money here. 9 times out of 10, it could very well be a hacked email. So your title company should never, ever, ever send you wire instructions without them being encrypted. And when you get them and you open them, you call the title company and you say, did you send me an email? Is this your wire instructions to send your money to? I know that might sound scary. I don't mean to be harping on it, but the worst thing that could happen is all your hard-earned money that you saved, you send it to the wrong place, and now there's no recourse to get it back. So again, my job is to talk to everybody. I'm really the last person that you're going to see. My biggest advice to you would be to just work with a really good team. Call Christine. Please, 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 please call Karif. Hector and Terrence are going to call. They're going to take care of you. They're going to make sure that your home that you're buying and the insurance that you're getting is the best of the best. And everybody here will bring home your team. My job is to support everybody else. My job is to make sure you have a clean house, that there's no liens on it, and to let you know where to send your money and how you come to me to sign your paperwork. So Christine, I'll give it back to you.
Good job.
They are the meat of our deal. The one that I bother all the time. Jasmine, what time are we closing?
That's fine. And I'll tell you, come in at 6 or come in at 3, whatever works.
But yes, they are the middleman that connects us for the lender and me to make sure that the package gets over, call you to sign everything, tell you what documents to come, and we get the keys and pop bottles and have a great time at the closing table.
That's right. It's a party every time.
They used to give out free cookies, but due to COVID.
I'll put them in a bag for you so you can send them home.
So after, now that we got all situated with title, we do have the appraisal that I didn't speak to at the moment, but I wanted to make sure that the deposit's done. Like I said, she checks to make sure there's no liens, title's clean on the property, and then the appraiser comes out. Now, you can't call Karif and be like, make sure you get me a good person to come and tell me. They don't pick the appraiser. It's a company that calls the listing agent and you have to pay your money. Yes, you as the buyer has to pay. That's an additional towards your closing costs to make sure that they come out and they tell you what the house is worth. They're going to check the water, a couple of things, take some pictures. And if the listing agent did a good job, the price will be comparable to what is in the neighborhood. Now, let's say the house is 250 and we come back and the appraisal comes back to be 225. What happens? We have 3 things that can happen. 1, the seller can agree to reduce the purchase price down to 225. 2, the buyer can say, you know what, I'll pay the remainder, which I've had some buyers do that too. Or 3, we cancel the deal and you do get your deposit back. That does not affect you from getting your deposit back. Now, I know that's also another question, that when is the last moment for me to get my deposit back? There are different times of the deal that you are in a low probation time. However, we are not going to wait to the last minute. I've had a client that was supposed to close literally the next day, and he decides to cancel and he wants his deposit back. I can't do anything about that. You are clear to close. The mortgage is fine, so I can't argue that. You don't have an HOA, the HOA already approved you, sent you an approval letter. We can't argue that. You have your inspection period time and the appraisal. Those are the 4 times that you can definitely get your deposit back. Other than that, make sure that you really love the house, so you can put the offer in and we don't have to worry about the deposit. Now, after the appraisal comes back and we reduce the purchase price, or it comes out perfectly, which is definitely the pro that we're looking for, we're going to move in to make sure that we get homeowners insurance. So Hector, if you can go ahead and talk to us about home insurance.
All right. It's my pleasure. Hey, Christine, thank you. And thank you for everybody who's attending this morning. Like, I'm just echoing what some of my other team members have said, and the teamwork and the camaraderie among all of us is very important. We all perform, as you've already seen, some very distinct functions, but we work very closely with each other. So my name is Hector, and I work with Access Insurance. We are an insurance brokerage, and we actually we're appointed with about 43, 44 different insurance companies. Now, that sounds like a lot, and actually it is, and I'm able to write all over the state of Florida. Depending on the home that you're purchasing, I may only have of those 43 or 44 companies, perhaps 4 or 5 that are open in your particular area. Now, my job depends a great deal on the insurance inspections. And I'm going to piggyback on what Terrence was sharing with us just a little while ago, particularly for insurance. You heard him mention that you have the full property inspection. I typically do not need that one. Also, there's a 4-point inspection and a wind mitigation inspection. So those are the 2 that I need to obtain an insurance policy for you. Now, each inspection is quite different from the other. The 4-point inspection will qualify the house for insurance. So what that means is that not every house can buy insurance. And generally, if you're taking out a special type of loan for a rehab house, that's going to be a different type of insurance policy from what we're discussing here today. But nonetheless, the 4-point inspection is for the purpose of determining, can this house buy insurance? Like Terrence mentioned, we look at just 4 things. Is the roof in good condition? Is the plumbing system, is it operable? Is the electrical system up to code? Is it working well? And the air conditioning. So we have the roof, the air conditioning, the plumbing, and the electrical system. So those 4 areas have to line up without any deficiencies. Now, there are some repairs where we've heard plenty of times already today, which you can get a credit for and take care of and resolve after the closing. Any of the 4 things that I just mentioned typically would have to be repaired prior to the closing so that the 4-point inspection can be amended to show that everything is, those 4 areas are in working order. Again, because the 4-point inspection determines if the house can buy insurance. So we want to make sure, A, that your house is insurable. So now we have a 4-point inspection. Everything on it looks good. Any other deficiencies that showed up in the full property inspection, well, those can be repaired after the closing or so, for the most part. As long as we have a good 4-point inspection where everything looks great and is in working order. Now we have the second inspection. This is the wind mitigation. The function of the wind mitigation inspection is to identify discounts to bring the cost of your homeowner's insurance down. All right, so we're looking at things like the construction of the roof. Does it have hurricane straps? How is the roof tied down to the home? Obviously, there's hurricane clips, there's toenails, there's different types of ways that the roof is tied down. And depending on what type you have will determine the kind of discount, if any, that the home can get. But most of the homes, not all of them, but majority of the homes do qualify for some type of discount here. If the roof was replaced after 1995 with a permit, then there's a discount for that as well. And now one of the largest discounts you can get is an opening protection discount. Now this goes just beyond hurricane shutters. We're looking at hurricane impact doors, hurricane impact windows, but also hurricane shutters that are up to the current building code. If you're looking at a couple houses and you pretty much like 2 or 3 houses that you're looking at, try to choose the house to the best of your knowledge that's going to qualify for the opening protection discount. Why? Because that's one of the biggest discounts you can get on your homeowner's insurance. And Christine's very knowledgeable about that. Terrence is also very knowledgeable about that. And you can ask him if the house qualifies for those discounts or not. Now, when it comes to homeowners insurance, it could be like buying a car, meaning you could choose to buy a Ford, or you can buy a high-end Mercedes-Benz. And we may look at some different options for you. I typically will present a couple different options for you, insurance-wise. Now, I'm always going to make sure that the homeowner's insurance quotes that I provide for you meet the loan requirements, which mean insuring your home at 100% replacement cost, and also providing the required coverages, which are primarily going to be the hurricane coverage. That's our biggest peril living here in Florida, and your fire coverage. And there's other things as well, but primarily that's what we're looking at, with a home with replacement cost. Other than that, you can buy a policy with a number of bells and whistles and extra coverages, or if your debt to income ratio that Karif mentioned earlier is tight, we can look at a coverage that's, I don't really want to use the word stripped down, but it's going to include the coverages that are required by the loan. And that's important because we all have the same goal. We want to get you into the house of your dreams. And again, we can do a workaround with stripping down policies to where it's going to meet the loan requirements. It's going to replace your home for the most important perils, hurricane, fire. And then down the road, perhaps when you bought the house, that you didn't qualify for the opening protection discount, but a couple months later, you installed hurricane shutters or impact doors and windows, and then now you can get that discount. And then we can add other coverages back at renewal time. So there's a number of things we can do with the insurance. Also, with a broker's office where we're not tied down to working for just one insurance company, we'll typically have multiple insurance companies where we can shop the market, and then I'll just present you with the best options. And perhaps it could be that today, based on the condition of the house, I only had this company for you. This had the lowest price. But now 2 or 3 months down the road, you install hurricane shutters or impact doors and windows. And then now I have another company over here that is offering a better rate with that discount than the company that I placed you with originally. Well, we can cancel the policy that you're on, even though it's a 1-year policy. I can cancel that policy if I find a better one for you down the road. So my point is we have a number of options when it comes to homeowners insurance. And there are a lot of ins and outs in terms of what kind of coverage you need to buy, and what kind of bells and whistles, what kind of extra coverages you can add versus what's required for the loan. But I'm happy to stay afterwards and answer any questions or give you my contact information. I think Christina is providing our contact information for everyone. And please feel free to reach out to me anytime. And even if you're just considering a house and you want me to give you a ballpark figure of what the insurance may cost on it, I'm happy to do that. And then I'll at least give you an idea as to whether you can afford that house, knowing what you know about the insurance and property taxes and so forth. But anyway, yeah, so inspections are so important. Oh, one more thing is I've had the privilege of working with Terrence for some time now and working with the inspections that he has provided. And I've never get pushback from any of my insurance companies on inspections I've received from Terrence. I mean, just yesterday in my office, we had an insurance company that did not accept the wind mitigation inspection because it wasn't completed properly. And we have a term for that in the office. We call it a bootleg inspection. We're just thinking, man, I don't know, this person just must have bought or found the cheapest inspector or so. But when it comes to inspections, when it comes to all these things that we're talking about here, it's not just price. We all are price sensitive. We want to get the best deal, but there's just certain things where you can't really compromise on. And from time to time, I get inspections coming back to me from the insurance company saying, send it back to the inspector. He needs to fix this, that, and the other thing. And it's a real shame, but I have not had that happen to me with any of Terrence's inspections. So anyway, props there. But please feel free to reach out to me anytime. I love my job. I love what I do. I'm licensed I can sell health insurance if I wanted to, life insurance as well, but I stick to homeowners insurance. I specialize in that. It's my favorite thing, and it's the type of insurance that I love. So I'm happy to be of service.
I want to interject one thing before we hang up on the insurance part. If after you have your inspection and we submit the 4-point and the WIDMIT, and the insurance company comes back saying, if you correct ABC, we can then issue those credits. Your home inspector guys, if it's within 30 days, we'll go back out and do any more photos or update those reports at no additional cost to you. So
Wow,
if it's after 30 days, then we'll have to talk about it because I got to cover, my gas and food and happy hour.
All right.
So yes, so now that we have went through the whole process of purchasing a home with my team, now we're going to get the clear to close, which will pretty fast for Karif on the loan, and Jasmine doing all the extra details that she diligently works hard in the back, and then we pop the bottles and give you your key. But like for real, we work full time, and that's one of the reasons why I love the team that I have, because I can literally bother them at any given moment to ask questions. I don't take it away from there's lenders for banks, yes, but I always say that SunTrust, Bank of America, Wells Fargo, Chase, they close at 5 o'clock. And you won't hear from them after 5 o'clock, and you won't hear from them on a Saturday or a Sunday. Nope. Where Karif, he knows that I will call him at 9:30 at night, like, hey. And he knows, and he get the job done. So this is conclude our first time home buyer seminar. If you do have any questions, feel free to unmute yourself or raise your hand so I can unmute you. Put it in the chat. I have put everyone's information on the chat as well, except mine. That's so funny. So I'm gonna put mine. And then if you are free, me and Karif do have an open house today. From 1 to 3, it is a 2-bedroom condo for $135,000. It's a perfect investment property as well. There's no rental restrictions. Say it again, Terrence.
I said that's a really good price.
Yeah, for sure. It's in Lauderhill, and it's actually by West Inverary Boulevard in Oakland Park. So I will put my information as well, so you can stop by. It's from 1 to 3 today. And if you have any questions before we close out, please feel free to ask. If anybody else from my team has anything else they want to say before we end our closing, you are more than welcome to as well.
Thank you guys for being here, taking the time out. Like I said, I'm available for any questions.
Chance, what did you say?
I said good luck with your first home, and I look forward to working with you.
Yeah. Anybody else, Jazz?
No, I'm excited for everybody here. I mean, you have a stellar team. I can personally vouch for that. So I'm excited to get some of these people in some of their brand new homes.
Oh no, that's right.
And also, guys, it's tax season. So if you do need that tax assistance, that tax advice, issues with the stimulus, I know everybody want them stimmy. Everybody wants their stimmy. So yeah. So if you need assistance, I'm here for you on that. Okay.
Go to Karif, have them do your taxes, and use your return as your down payment on a new house.
Yes.
Just saying, now's the time to do it. Karif can help you from A to Z, and Christine will put you in the house, and Hector and Terrence will finish it up.
Major key right there. Major key. Now is the time. Now is the time to start thinking about it. Yep.
I just
get it all done.
Come in. God, wait, I still didn't get mine yet.
Oh yeah. Oh, check your update. If you haven't received your stimulus by now, they said they closed it at the 15th. So if you didn't receive it by the 15th and you checked your online update on irs.gov/getmypayment, if it still says unavailable, you have to claim it as a credit on your tax return.
Wow.
and it will be given with your tax return as an additional credit.